audit risk consists of three different concepts. Okay, when we say it's an audit risk, it says that you will have an inherent risk, you will have a control risk, and you have a detection risk. Okay, this is 6th of March 2024. Yeah? See, they will ask, how the question will ask, they will ask you a very major question. They will ask you for minimum 10 marks. Okay, what they will ask, identify audit risk and what is the audit response. They will ask, identify any 5 audit risk and what is the audit response. If that is the case, now examination point of view, it has to be done in the tabular form. You have to identify 5 risks and you have to give 5 different responses. Okay, now this is only theoretical one. Examination will not be on examination. What they will ask, the examination ask, they will ask what is the audit risk, that all. They will ask audit risk definition only for how many marks? 3 marks. They will ask for a scenario based questions. If it is for 3 marks, they assume it will be for 3 marks, and this will be for how many marks? 7 marks or 8 marks, whatever it may be. 20 marks, they will divide it accordingly. Okay, what is the, see, there will be a risk. There will be a risk in terms of inherent risk. The control risk, controls are not effective, then there will be a control risk. Detection risk, we cannot detect the things as such. Okay, that we cannot detect because it is beyond beyond the framework of auditor. Is it beyond the, because what happens, keep it in mind, external auditor or statutory auditor, okay, external auditor will do 2 things. One they will do with respect to interim audit, and one with respect to they will do the final audit. Okay, interim audit will be in detail. Okay, final audit will be on specification like closing balances, confirmations, substantive procedures. It will be not that much we are doing with final audit. Final audit, selective issues. Interim audit in detail. Now what happens? What is the understanding of inherent risk? The susceptibility of a balance to misstatements before consideration of controls. Is it before the mistake, before you don't have any controls? Inherent risk. Inherent risk means you don't have any controls. If there is no control, definitely there will be some element of risk. What is the risk? High risk, a client in a high volatile industry. Changes are there. Is that? Changes are there. Regulations are changing all the time. Rules are changing all the time. Market conditions are changing. Is that? Market conditions are changing. Is that? Market conditions are changing. Regulations are changing. Is it? Regulation. Political factors also changing. These all happen because of political factors. Is it? Next. A client in a high volatile industry, inherent risk means risk is way, because the changes happening, you have to do the changes from your side also on a immediate basis. The next, engaging in a foreign transactions. What happens? See, the why foreign transactions? Exchange rates are there. Exchange rates always changes, volatile, online. It will happen on what? It will be a real time, I will write like this, is it? It will be on a real time basis. It will be on a real time basis. Risk is very high. Okay, rapid changing technology. Is that rapid technology is changing, your software, the hardwares are changing. Is that risk factor, the security aspects are changing. Automatically what will happen? Definitely you should also, they will not say every year, 2 years, in 3 years, in 4 years. Is that changing? If the changes is happening, what will happen? See the thing. Technology is changing. Is right? Sometimes what will happen? You should also have to change the software specifications. If technology is changing, you are moving it from a physical platform to a IT platform. Which is that you are changing from one platform to another platform. Automatically what will happen? There is a inheritance. You have to carry forward the balances, carry forward the amounts precisely, perfectly on a transition basis. If that is the case, there is a inherent risk. Control risk, controls fail to prevent. Controls fail to prevent and detect. See, you have the controls, but the controls are not effective. Is that? If the controls are not effective, is that? If the controls are not effective, then it is identification of a control risk. What are the things? Old and ineffective accounting software, lack of segregation of duties. This element will be there everywhere. Lack of segregation. The most important thing audit risk is you should have a segregation of duties. No one person should be done, no one task should be done by more than one person, and lack of authorization. See the thing. Now you will say, when you are talking about the authorization, I am giving a real. See, you want the business wants to give discounts. Okay, when they have to discount, it will not be in the hands of a salesman. It will be in the hands of either it will be in the hands of a sales manager. Approval should be needed. Okay, approval should be needed from the sales manager, so that salesmen can offer that discount. Anything is happening, there should be an approval from the people charged with governance. Is that people charged with governance? Authorization processes. Authorization processes are very, very specific. Without authorization, access to the data. Without authorization, you cannot access the data also. Master files. They will use the same words. Okay, they use the word with respect to master data files. Clerks should not access lower level managers. I can put like this: lower level managers should not access master data files. If that is the case, definitely there are no controls are there. Is right? There are no controls are there. That we are going to cover. Next, detection risk. It fails to detect material misstatements. Is that? It fails because you cannot detect one. When it fails to detect material misstatements, what will happen? It means that you are using inappropriate procedures. We are not using the right method. Okay, we are not maybe sampling. We are not doing sampling. Okay, if you are doing the thing, you have to do sampling in a right way. How much you have to do? Then only we can detect material. We cannot say at any point of time that the errors are zero. That we cannot say. An auditor will never ever say that everything is perfect. If everything is perfect, in rarest of the rarest cases it will happen. And in sometimes I can say with that much of confidence that sometimes it will never happen. Is that we will cover this. There is an inherent risk, there is a control risk, and there is a detection risk. Inherent risk is before consideration of controls. Control risk fails to prevent and detect material misstatement. Detection risk fail to detect material misstatements. Is that in the examination they will be there will be a question on this. Almost 8 marks. Is it almost 8 marks? What it says, see the thing. When you are talking about the thing, what audit risk consists of? Audit risk consists of inherent risk, control risk, and detection risk. Is that if what is the detection? We have failed to detect any material misstatements. Is that failed to detect any material misstatement? See, now assume how it is happening. You are having 10,000 transactions. Is that you have to audit 10,000 transactions. Now everything is depend on what? Everything is depend on the sampling. If you take 1% of that also, is that if you take 1% of that also, how much it will get? You will get 100 samples. This is very important. This is nothing but the judgment of the auditor. How much samples we have to take? How much samples we have to take? Now what happens in most of the cases? In most of the cases, we are talking in terms of what? We are talking about material misstatements. Assume, I am giving both the scenarios from the examination, both the scenarios. One side you are saying that you have taken 100 samples, is it right? Now in 100 samples what will happen? Assume you are having an errors in 10 samples. Your judgment matters. You will increase sample size. Is it? So you will say, and you will add how many another samples? Another 100 samples. If the you are increasing, instead of 100, you will take 200. 100 previous one and additional 100. Now what you will see? Again you will make a judgment. How many errors are there? If the errors are less, assume 7. Is that so? Within the limit? Okay. If errors are 7, then you can come to your own judgment. Okay. You can increase the sample size, or with the current scenario, we can continue given our opinion. Is that this is what it says? Detection risk is nothing but the sampling risk. How we are going to select the sample, and on what basis we are going to make the judgment on the sample. Something will be with respect to sampling risk, and something with respect to non-sampling risk. Fine. We will cover this in subsequent slides. What is the inherent risk? It is the susceptibility of an assertion that the material misstatements could be material, individual, or when aggregated. I told you so many times previously. Is that always? This is part of the sentence, it will be there. And we have to write like this. Assertion to a misstatement, whether could be material individually or material when aggregated. Means if you are talking about the individually, fine. Is that individual errors? But if you are talking about the total, that also matters. Means you have to take individual, see, and all the things we have to add to know what is the total. If it is a material, then it makes things. It happens when assuming there is no related controls. What are the examples? First understand. High cash transactions such as retail. Is that high cash transactions? I told you, you have a hypermarket, you have the, what they will say, they will have so many cashiers will be there. So many cashiers will be there. Everyone is getting, assume 5 reals as a shortage. What will happen? 5 reals into 20 into 2 shifts. Just imagine, every day there will be a loss of how much? 200 reals. 5 reals is individually and 200 reals is the aggregate. That is the inherent risk. Is it right? High cash business such as retail. Inventory valuation in the jewelry business. Inventory valuation, if you take the jewelry business, every other jewelry will have its own uniqueness. Is that if we cannot say that if we go on doing some miscalculations in one jewelry, it will be accounted, and in the end it will be a huge amount. Okay, huge material. It is a materiality. Integrity of the management, quality factors. Is it right? Integrity of the management. If the management is not focused, is it right? Definitely what will happen? You will have something happening in lower level, something happens in middle level, something happens at the higher level. Fine. This is the third aspect. And most important thing is, it is a technology obsolescence. See, this is what we have to do. We are talking about the inherent risk. If you are not doing updates, definitely there is a possibility of risk. A small example I will give you. Whenever you are using the passwords, whenever you are using the passwords, what they will say? The passwords has to be changed. In some cases, the passwords has to be changed every 7 months, 3 months. You will have the updates. You have a new versions. You have the new version. That's the difference between Apple, iPhone and Samsung. Very simply, iPhone security is very, very high. iPhone, there is a updates. See, I'm not saying that there is an advantage here, there is an advantage there also. But we are making sure that things has to be updated, and we are not going to fall far behind the technology. These are the things. Inherent risk means it happens with no related controls. No related controls are there. This is the first one. What is the control risk? In simple words, you have the controls, but the controls are ineffective. Will not be prevented or detected on a timely basis with respect to internal controls. Fine. See, this is little bit thinking subject. Okay, you should make it a point. You have the controls. That is the reason what you are doing. There will be controls, and to know this, there will be test of controls. They will ask you the difference between controls, defined controls, and test of controls. Controls will be implemented by the internal auditor. Test of controls will be done by the external auditor. You will go and verify, you will observe whether controls are effective or not. You will observe whether the controls are, you want to know whether the controls are effective or not. That is the control. Means if your internal control mechanism is weak to detect the frauds and errors, then it is going to be identified as a control risk. Again, in this case, they are saying what? It is individually or when aggregated. What are the things? What are the controls? What they are saying? See the thing. Monthly bank reconciliations not see, the same points will be tested in examination. Nothing they are not going to ask anything else. Bank reconciliation. Every month we have to do bank reconciliations. If we are doing bank reconciliations, fine. It's not the accounting clerk. Is it right? It is not the accounts clerk. It has to be reviewed by what? it has to be reviewed by the manager. It is a control risk. Now, same point, keep it in mind. We are not doing anything else. This is the first one. Second one, what happened? Purchase invoices not matched with goods received note, GRN. Is it? What happened? See, now you see the thing. We are ordering something. Is right? We are ordering something. When we are ordering something, definitely what will happen? There will be an invoice. There will be invoice and there will be a delivery note. You will acknowledge and you will sign. Understand? You will acknowledge and sign. You are ordering something. Definitely he will come and he will deliver at your place. You are not going to blindly pay the amount. You will say that what I have ordered. You will verify whether what I have ordered is as per the requirement or not. Only you do that. You are not only to do the, you will see the particulars, specifications, you are seeing the quantity, you will see the price and you will see the total. That is the control risk. Is that you are putting the controls on at every place. Is that you are matching the invoices with the goods received note. References not followed up for new employees. You are appointing. This comes in the HR. Is that you are appointing the people, but you are not following the references. You are not getting the follow with you. You will ask for references, and for the references you have to get the response. Is that you are not following for the new employees, means you are recruiting people without having a proper verification or without any references. Computer passwords not required to change regularly. See, if you talk about passwords now, it will be one full entire session will be there. They will say very clearly. Now you understand. They will say very clearly. They say that the password should be how many characters? 8 characters. The password should have special characters. One special character. Okay. They say that they should have a one capital letter. They will say that they should have. The more you will get conditions. Okay. The more you are getting conditions. They say that one special character, one capital, you should have a one number as such. And when you are changing the password, you cannot repeat, okay? You cannot repeat previous passwords. Is it? You cannot repeat previous passwords. That is one of the conditions. Is it? These are all the things that matters very, very crucially. That is what it says. Control means you are putting controls on the password that if you are not changing regularly, it will be a control risk. Understand? 4 different things. One is with respect to bank reconciliation, not reviewed by the authority, relevant authority. You are not matching the purchase invoices with goods received note. We are not following with the references of the new employees, and most importantly, we are not working on the computer password not changed regularly. Are you clear about this?
I have a question, please.
Please tell me.
So in this case, how the material misstatement can be individual or like aggregate?
Which one?
How the material misstatement and control risk can be individual or aggregate?
Fine. Individual or aggregate, is it? I will take one example. For all, I will give examples. A firm will have only one bank account, or will have multiple bank accounts?
Multiple bank accounts.
Multiple. For every bank account, you have to do reconciliation. Is it? You have bank 1, bank 2, bank 3, bank 4. If you are saying in bank 1 there are some errors, individually bank 1, bank 2, totally you will aggregate. The errors will be more. Is it okay?
Yeah.
Next, for everything. Now you can understand on your own. I gave one example. Purchase invoices. You will have one purchase invoice, you will have multiple purchase invoices.
Multiple.
Multiple. If you are not matching purchase invoice with the goods received note, assume you are going to say that you are having 100 invoices. I am not saying that you have to do on 100 to 100. You are taking the sample. You will take the sample. You will take the sample of 10 invoices. You will take the. Now, if 10 invoices, there will be some misstatements. What will happen? It will say multiply by how many invoices? It will be multiplied individually and aggregate. Are you getting my point?
Out of 100 invoices, we have 10 invoices with errors, right?
No. Out of 100 invoices, we are taking how much sample? We'll take the sample of 10 invoices. Okay, we take the sample of 10, we take 10 samples, okay? When you are taking 10 samples, assume 5 samples are fine, okay? 5 samples are sufficient and I will not using the word correct, sufficient and appropriate evidence. Now, you have 5 samples, there is some question mark. Okay, there is some question mark. Now, individually 5 samples, totally how many multiply by 5? Individually assume a value of 5 reals. Individually 5 reals. And aggregate will be how many reals? 5 into 5, 25.
Yeah, okay.
Is that individually as well as aggregate? Are you clear about this?
Yeah.
Next. Same thing happens. References of new employees. Individually and aggregate. Computer passwords. Individually and aggregate. Is that we should not think about one. When assume. Now I will give another clear idea. You are talking about the computer. Computer passwords has to be changed by default. Everyone will have a bank account. Bank account, they will mention, some banks will say that it has to be changed every 3 months. Some banks say it has to be changed every 6 months. Forget about banks. You have a user password. Is that you are at your workplace, you will have a username and password. When you have the username and password, what will happen? They will ask to change the password. You are not going to change the username at all. You will only change the password. When you change the password, there will be lot of terms and conditions. Then now you are saying that you are changing the password. What is the now recent thing? They say that you will get one OTP. Once you enter on your mobile phone, okay, that is what it says. You will get on your mobile phone. Once you get an OTP, you enter that OTP, password, then you will enter, there will be another icon will be there where you are entering the OTP. One OTP will be there, then you will get submit, then automatically what will happen? Password will change. Now the thing, this is the control risk. Once you have changed, there will be an email come to your inbox, registered inbox, that you have done these changes or not. If you have not done these changes, get back to us. Whenever you deposit, whenever you withdraw money, message will come, email will come. They will say if it is deposited by you or not deposited. If you have not deposited, reply to this message. You are changing the password, message will come on your registered mobile that the password has been changed successfully. The password has been changed successfully. This is nothing but the control risk, individually as well as in terms of aggregate. Very important to understand. Is it okay with you?
Yeah.
Fine. Now, the more you people ask questions, the more clarity will be there. Okay. Now, detection risk. What is the procedure is you cannot see the is the risk that the procedures perform the auditor to reduce risk, audit risk to an acceptable low level will not detect. Cannot be detected. Is it right? Detection is there is no controls are there. When there are no controls, we cannot detect what happening, what's are not happening. We do not know what is there, what is not there. This is the only component of audit that the auditors have control over. This is the only component that the auditors have control over. Is it? Now what happens? Are you clear about this? Again it says, see when you are writing this, I will make it. They will say that it will not detect a material misstatement that exists in the system, could be material both individually as well as when it has been aggregated. These are little bit difficult statements. I'm telling you, not difficult. You will have lot of confusion, as simple as that. But it has to be very clear. When we say it is an inherent risk, there are no related controls. No related controls. Is right? Best example, high caste businesses in the retail industry. Control risk, you have the controls, but you cannot prevent that errors. Is right? We cannot detect on a timely basis. Is right? We cannot detect on a timely basis. The third one is detection risk, which says that relates to the risk that the auditor will not detect that misstatement. Getting a point? Auditor will not detect that misstatement. Definitely, you cannot. You see, it is beyond. What are the examples they gave you? Just see the examples. Okay, where are the examples? Fine. Is that detection risk? If the sampling is that it is a concept of a sampling risk and a non-sample. See, if there are no detection, you take 100 samples, you take 1,000 samples. No controls are there. Can we detect? We cannot detect. Beyond our control. Is made of two components. Is that both, but simply increasing the sample size and carrying out more work are not the only way to manage. See, as simple as that. If what happens usually, assume you have 10,000 transactions. You will take 1%. You will take 100 transactions. Automatically you will take only 0.5% transaction. Only 50 transactions. You can make a judgment what's happening, what's not happening. It's not a difficult case. But you are saying that controls are not there. No, nothing is there. It's in a very unorganized way. You are checking 100, you are checking 1,000, you are checking 2,000. It doesn't make any difference. Is it? Now, in this case, we have to be very, very professional skepticism. Is it? Due diligence. We are using all the things. You should have a judgment. Okay? Detection risk is a function of effectiveness. How effective the procedures you are doing. See, this is the way the auditor comes into picture. If I am going to say that everything is correct, then there is no need of an auditor. Auditor wants to know where there are the issues to be identified. The auditors will have a professional judgment. The auditors have their own judgment. What they will do, they will focus. They will focus mostly on what? Sampling. Either you are doing a wrong sampling or you are not doing the right way. Both are same. The problem is they say that there is something in sampling. You are not targeting the specific place. You are not going to say that yes, there are different places, different areas. Assume in terms of what? In terms of inventory. In terms of payroll. These two things are always haunt us. Always haunt us. Inventory and payroll. They will give one question on substantive procedures on inventory. Payroll. What happens? You don't have, you are paying cash. Is it right? What will happen? Payroll. Especially in terms of wages. Especially in terms of wages. Is it? You are paying the wages and you don't have any follow-up action. Whether you have paid to the right party, to the right worker, you are not taking any acknowledgements, nothing is there. Or you are not having a proper follow-up on that basis. Then if that is not the case, if there is no controls are there, actually when you are paying it, you have to pay it, you have to take an acknowledgement. Sometimes these are the questions. If you read all the past question papers, they will say the thing. They say that there are 10 employees will be there and they are paying salaries, they are paying wages for, on the particular day, 8 laborers will come and 2 laborers will not come. The supervisor who is giving the salaries, he has to take the acknowledgement and he has to deposit back. He has to deposit back the money back to the concerned official person. That is the deduction risk. If you make sure that you increase the sample or you decrease the sample, if there is no controls, automatically we cannot have any deduction. Are you clear about this?
Yes, sir.
They have divided. Little bit technical. Okay, very technical, I will tell you. Very technical. What is the sample risk examples? Non-sample risk examples. Sample risk examples are easy to understand. Nothing is there. Sample chosen not representative of the population. Misstatement in transactions not selected a part of the sample. The first thing we will go one by one is not representative of the population. We are talking in terms of inventory. Is that? Inventory will be in different locations. Is it right? Inventory will be in the different locations. When inventory is in the different, assume, take very realistic example. Inventory will be in how many locations? Inventory will be in the 10 locations. Divide it. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. You will see where the inventory is having high value, where the inventory is having a low value, where the inventory is moving fast, where the inventory is moving slow. On that basis, you will identify the sample. High value goods, you will be more focused. We are not going to say that low value goods we will ignore. No. High value goods will be more focused. Inventory at the third party will be more focused. Inventory which is moving very fast will be more focused. Automatically what will happen? We are focusing on the specific sample. We should not take a wrong sample. Sample chosen, not representative. It is not related to the particular objective, then it is going to be called as a sample risk. It nothing but we are using a wrong sample. Is that we are using a wrong sample, then it is going to be identified as a sampling risk. Misstatements in transactions not selected a part of sample. See, very clearly, misstatement in the transaction where the errors have been happened. Is that those samples where there is a possibility, is it right? There is a possibility of errors. Because of what? Because of ineffective controls. Because of ineffective controls. We have to be very specific. We not selected as part of that. We are ignoring that. Either we are ignoring. It happens. It happens when we are talking about inventory. You will come across so many questions with respect to inventory. When we are talking the inventory, what will happen? Inventory, there are two methods. One is perpetual inventory, one is periodic inventory. Periodic inventory based on the time. Okay. Perpetual inventory is continuous. Some manufacturing units are there. They will tell you in question very clearly that you are a audit manager. You are given the task of doing audit for the inventory. In the inventory, the inventory is a continuous process. Production is a continuous process. How you are going to select the samples? It is called as a sampling risk. Non-sampling risk, we are following wrong procedures, inappropriate procedures. Procedures, we will cover it in the lecture 8. Okay, substantive procedures. Procedures means we are talking in terms of different assertions. We have analytical procedures. Is it? We have analytical procedures. We have substantive procedures. Yeah, where we want to make analysis a part of audit risk. When you are talking about the audit risk, is it? We have to be little bit careful about ratio analysis. In the ratio analysis, there are some 6 or 7 ratios only. Those ratios we have to calculate and we have to reflect. In the examination, sometimes they will give, sometimes they will not give. But ratio analysis is only this much part of calculation. Beyond that, nothing will be there. Is that with all that question papers in? Is that's what this is the sampling risk, where we have to use analytical procedures, where we have to use substantive procedures. Failure to carry out an audit procedure correctly. We want to do current ratio, we will do quick ratio. Very simple. We will not understand that. We have to do what? We have to do current ratio. But instead of current ratio, what we will do? We will do quick ratio. I am giving a small example so that it will make things clear for us. Is that you have made an analysis, you have done ratio analysis, but your interpretations are wrong. And more importantly, failure to carry out an audit procedure. You are not doing an procedure at all. You are not doing a procedure, neither you are doing an analytical procedure, nor you are doing a substantive procedure. You are completely skipping the procedures. Then it is otherwise called as sampling risk. Difference between a sampling risk and a non-sampling risk. Are you clear about this?
Yes, sir.
Yes, Mariam, Gaita and Laila.
Yeah.
Yes, sir.
Little bit. See, I am telling you very simple. I'm not misguiding you. I'm telling you this is little bit technical. We need to we need to revise, we need to understand, we need to practice. As simple as that. Is it right? It's not, you cannot say that first time you are going to capture. Unless until we revise again and again, the clarity will not increase. What it says, we will complete 1 or 2 slides and we will close the thing. How can the effectiveness and application of procedures be improved to reduce detection risk? This is where the application will happen. This is what we are doing. There will be a risk. We cannot say risk will be 0. What we are doing, we are here only to minimize, or we are only to reduce it. What it says, you should have a planning, assign more experienced staff. You have to write this much only in examination with a small explanation. With a small explanation, how to reduce the detection risk. Don't say that you have to write. You have an adequate planning with respect to specific audit task. Inventory is different, payroll is different, bank reconciliations are different, everywhere depending on the situation. Okay? Next. How you can, yes, tell me. Yes. What you are going to do, how we will reduce the risk? Simple understanding. You have to employ experienced staff. How you are doing? You should have a professional skepticism, questioning mind. Is that this is what we have done in ethics? Is that this is what we have done in ethics? Is that professional skepticism? Always you should have a questioning mind. What has been went wrong? How we can make sure that things are perfect. I'm not saying how things are wrong. How we have to say that the evidence is appropriate and sufficient. This is what it says. Apply professional skepticism, judgment, questioning mind. Then only we'll have detection. We should know where the things can go wrong. And more importantly, increase supervision and review. See, audit work basically done by whom? Done by the juniors. Okay, done by the junior. Now it is as an audit manager, audit supervisor, you have to make sure that it all your experience that matters. And basically it is the experience that makes the difference. By knowing the things, you will know, yes, in this firm it has been done like this. You will say that, yes, in that firm it has been done like this. Maybe the same thing is doing here. Automatically you have to apply those things. And you should make sure that, yes, things are right. There is sufficient and appropriate evidence. This is where we are talking about the effectiveness of the procedures to help detection of the detection risk. Okay? Now, control risk and inherent risk together make risk of material misstatement. Nothing, now almost we have covered everything. Okay? Means you have, it leads to what? Material misstatement. Audit risk must always be set to an acceptable low level. See, when you are doing a wrong opinion, we should not come to a conclusion and give a wrong opinion. See that mentioned very clearly. The risk of an auditor giving the wrong should be obviously as low as possible. When you are giving an opinion, is it right? Very exceptional cases, you will say except for this item, other things are perfect. See, we have to always be set to an acceptable low level. It's not like that we have to give low level. We have to give always positive opinion. No. But whenever we are giving that, what the point says that we have to audit all available options. We have to explore, as simple as that. We have to explore all available options and only you have to come to a conclusion. Auditors will assess inherent risk and control risk as in three things: high, medium, or low. Is it? Now, just read this question, read these 4 lines on your own without audible. Just you read from your eyes. It says that they are comparing detection risk. If the inherent risk, is it right? If the inherent risk and the control risk are high, it means we have covered the detection. We have covered the detection risk will be at the lowest level. Means we have pinpointed each and everything. If the inherent risk and control risk are assessed high, means there is a high potential of inherent risk, there is a high potential of the control risk, means that the element of detection risk is very, very low. It means that we are unable to detect the errors. We are unable to detect the errors. If we are unable to detect the errors will be very, very high. In inherent risk and see again I am repeating this word. If the control risk is high, if the inherent risk is high, assessed at high, it means what? Our detection element is very, very less. Is that? Our detection element is, this is the way they are relating the inherent risk and control risk to the detection risk. If it is understood, say yes. If you want to make some more explanation, I will do this. This is very important.
Sir, please, if you can reply. Okay. The last point.
1 minute. I will do. I know. That's why I asked you. Okay. Now, what is the detection risk? Detection risk is nothing but the sampling risk and non-sampling risk. Little bit difficult. Okay, first time it takes time. Sampling risk based on the sample size. Non-sampling risk is based on procedures. Okay, non-sampling risk is in the procedures. Now what they are saying, detection risk is the balancing figure. Is it? Detection is the balancing figure. Balancing figure means what? How it will tilt. Okay, how it will tilt. Now I will put a seesaw figure like this. Here you have an inherent risk. Here you have a control risk. Is very, very high. Understand what? It's very, very high. Just complete here. It is completely at the bottom. It is completely at the top. Is that? It is currently means what happening? Are you making detections perfectly? If controls are effective, controls are not effective. control risk is high. Controls are not effective, control risk is high. Is it? Is it? Controls are not. If controls are not effective, you will not have any detection risk. No detect. We are not detecting, because of that controls are not being effective. Inheritance risk before controls, the things are very high. Again, we are not making any detection. See, if as simple as that, it is like a radar. Is it? It is like a radar. Okay, the radar is effective. What will happen? Things will be in control. If if the cameras that has been placed on the roads, I am giving you a realistic example. The cameras that has been placed on the roads are not effective. What will happen? The risk will be very, very high. There is an inherent risk. There is an inbuilt risk. If cameras are effective, is that if cameras are effective, what will happen? The detection risk will be less. Is that if the cameras are effective, if the detection risk is high, automatically what will happen? The inherent risk and the control risk will be less. Pardon?
So here you mean if the inherent control risk is very high, there should be like effective procedures in order to detect the same and to come up with an accurate opinion by the auditor, right?
Accurate procedures.
Accurate and effective procedures, yes, by the auditor in order
Yes.
to come up with an accurate opinion.
Yes.
Okay.
Okay. We have we have, that's the way. I will complete this and I will stop here. Understand what? This is the same work. If your cameras are effective, what will happen? The risk is less. If the cameras are, see what happens, see the thing, as simple as that. You have cameras on signals, you have cameras on the road. The moment they are installing cameras on the road, what will happen? The accidents are very, very less. Controls are there. Is that controls are there? Control risk will be within the limits. Is that is the relation we have to make. That how the detection risk means what happens, which is more, we cannot say which is more important. We have to say that you put the radars, you put the scanners, you put the controls. Is it automatically what will happen? The moment you have effective controls, there is a possibility that we can detect the errors and frauds. If there are no controls, we cannot detect errors and frauds. That is the balancing figure. That is the reason I put like this. Is that I will put like this. I'll put two people are there. If this person is strong, means this person, automatically you are not balancing the detection risk. Your detection risk is very, very low. If detection is very, very low, what will happen? The control risk will be very, very high. There is a chances of more errors. Is it okay?
Yeah.
Fine. This is late. See, it takes time. I know this takes time. Next, all chapters will take time. Okay, only thing is you should understand where we are working on the concept. Is it right? Now, I will stop here. Next class, we are starting with materiality.